Our expectation for global growth in 2017 is 3.5%. That would take us back to the top end of the range that we've been seeing over the past 5 years or so. Now, if you look at the parts of the global economy, I think the US has led the improvement, and we do expect continued 2 to 3% growth. Financial conditions are an important factor there. Some fiscal easing is also likely under the Trump administration, unified Republican control. Elsewhere in the world, it's a more mixed picture. Euro area, we think the most likely sort of pace of growth is more of the same, about 1.5%, which is consistent with gradual further labor market improvement. Japan, similarly, growth in the 1% range. That is better than it sounds. Japan has a very slow potential growth rate, basically because of the weakness in the demographics and the decline in the working age population. And then in the emerging world, as we look to China, 6.5% or so, the concerns in China are really more long-term concerns around the continued very rapid pace of debt growth and the potential for financial weakness and bad debt problems that could arise from that. Elsewhere in the emerging world, we would say that the commodity producers that saw a lot of economic pain in 2015 and early 16, there is some recovery, some gradual recovery going on that is actually responsible for a fair amount of the overall acceleration in growth that we've seen. These are still not particularly strongly growing economies. If you take Brazil, for example, they have yet to move into actual recovery. We do think they will, but it's going to be gradual. Finally, India, an economy that has outperformed in recent years, has been growing quite strongly. At the moment, there's quite a sharp slowdown in India, basically because of the currency reform that was introduced by the Modi government several weeks ago. Right now, the economy is slowing quite a bit. We think in the near term, risks are definitely on the downside relative to a lot of the estimates out there, consensus estimates.